Good morning. Good morning. Good morning. How's everybody doing today? All right. How's everyone doing? Hopefully good. Hopefully everyone's printing a little bit of cash. The banger longs played out, thank goodness. And we're still pumping. Still pumping. All right, so we got about 23 people. Where the hell is everybody? It's like 700 people in the Haven. But okay, so guys, I don't really have a game plan for this stream. I think it's just going to be very simple. The longs obviously paid, which is great. So congrats if you took those with me. I hope some of you did. I know not a lot of people on Twitter were bullish, but we were, weren't we? So that's all that really matters. What I'm going to do and what I think will be most valuable here is I'm going to break down these longs from the top down because I think it's going to, give you guys a very good view of the system in action because both of the longs that were taken here, the original long, the compound, and even this little thing I drew here. Remember, when we were dumped down here, I said it shouldn't go below this circle. And as you can see, you could have entered here with your stop here, and that would have been a crazy risk reward on the H1. So I'll go over it in detail because I think this is a perfect example of the long. This is what I like to call a Lambo long because it's actually an H12, H12, and then an H1 trigger. So it's like even more kind of confidence, more confluence than your typical long. Does my camera angle seem high? Or am I just feeling short today? There we go. And then, if you guys have any questions, I'm more than happy to answer them. But I think doing a top-down breakdown of the longs is going to be very valuable because this is the bread and butter setup, right? This is H12. This is monthly, down to the weekly, down to the H12, and then entering on the H1. So if you remember in my last post about a video I was going to do here. So you guys remember this post? Right? So I said the second way to improve the strategy is top down. So not just using the H12 and H1, right? But doing so within the higher time frame range. So adding those additional higher time frames is going to give you a even better hit rate than just the H12 and the H1. So this long is a perfect example of that. So I'm going to use it as a way to demonstrate exactly what I was talking about in that post. And I think it will just add a little bit more clarity to the system for those of you who still may have some hiccups and things like that. And we'll go from there. All right. What up, Luis? Psych Paul, can you glaze me? No, bro, you cannot. That's my girlfriend's job. Jack, what's up, bro? Brendan, Carl, Zogs, Viseri. Go with the flow. What up, G? Petro, what's up, bro? All right. So let's hop into it here. So remember, okay, the original strategy, what up, Joe, right, that I taught with you guys is just the H12, H1, okay? Now, the purpose of the simplicity of the strategy, right, is exactly that, simplicity. The goal is to give you something mechanical. Now, as I've said before, obviously there's certain aspects of trading that aren't mechanical. Like yesterday, you could have cut this trade, right? You could have cut this trade because it didn't look so good. It was a little bit sketchy. It was taking a while to play out. But the goal is to give you something that is as mechanical as possible. And if you follow the rules and take the trades consistently, doing the same thing every time over a long period of time, you've got yourself a profitable strategy. So the reason I start with the H12 and the H1 is because it's simple. It's a 2 time frame system, right? Most people, when they're doing their analysis, they're going to use multiple time frames, right? You have to. If you're using only 1 time frame, I have questions about your system. I mean, it doesn't mean it can't work, but generally you need top-down analysis, especially if you're trying to trade this kind of ICT-like PA type of systems. You need to understand that everything flows from the top down, right? So it goes high time frame to low time frame, because the low time frame is simply for your entries, right? And your exits. Okay, while the high time frame is your draw on liquidity, your bias, and your POIs, your areas of interest, right? So you need all of these things before these matter at all, right? So I try and explain that to you every time, and I try and beat in your guys' head, because that's the point, right? You need to see this over and over and over again to really have it cement in your mind. And I hope I do a good job of doing that. I definitely know a lot of you are picking up on it based on conversations and questions that you guys ask. I can tell from the questions that are being asked, the people who are digging into it and doing it in their own charts and really putting in the work versus the people who aren't. And that's not a shot at anyone in particular. It's just that I can tell, because when you start doing it yourself, certain questions and certain things are going to come up naturally in that process. So I talk about this all the time, right? The entry fractal, right? But you're going to see this everywhere on all different time frames happening constantly. But this is only going to give you the result that you want, like we had this morning, when you have all of this shit first. You need your draw on liquidity, you need your bias, and you need your points of interest. So initially, I started out by just using the H12, saying, hey, this is your high time frame. Find your range, and then find your POI. The reason I do it this way is because it's simple. When you draw out your H12 range, right? If you're in the lower part of the range, okay, what is your bias? Bullish. What's your draw on liquidity? The mid-range and the upper part of the range. What's the POI? It's the order block or breaker block that caused the creation of that new range. So it handles all of those variables for you, okay? That's why I taught it this way, because you have 1 time frame. I give you a very basic framework, and with that very basic framework, you can get your draw on liquidity, your bias, and your points of interest. Then you go down to the H1, and that's where you refine your entry, you get your exits, you do all of that shit, right? That's where you go look for the fractal. Now, that post I made in the Haven saying, how do we make this even better? How do we improve upon this system? And the way that we improve upon this system is we add more. So this remains the H1, but instead of just having the H12 here, right, we also add the weekly or the monthly, right, or the 3-day, whatever you want. You add more high time frames. And as you get more comfortable, but you're looking for the same thing, POIs, bias, draws on liquidity. But as you add more time frames, if everything from the top is aligned, so bullish, 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 this H1 trigger is going to be much more powerful than an H1 trigger where just the H12 is bullish. So that's what I meant in that post. If you can now start to find H12, H1 setups while in the discount, so the lower part of the range on the weekly and the monthly, that's a way stronger setup. Okay? So that's exactly what this trade was. And I'm going to break it down for you in hindsight. And you guys have seen it played out live. It took, I don't even know, 7 days for both positions to fucking smash. Right? It's the end of August. These could be the only two trades. The second position is 5R with a loose stop. That's a month maker. One trade, right? Not to mention the first trade that was smashed. And there was an even better entry offered that I pointed out. I didn't obviously take it, but that I pointed out on the H1. So you're going to get those banger trades when you have more confluence on the high time frame. It's not about going to a lower time frame. It's about actually lining up even more high time frames in your directional bias. That's going to give you the really killer trades. And they're not going to happen all the time, right? The monthly, the weekly, even the H12, they take a while to set up. As you guys can see, I don't take a ton of fucking trades. And I primarily am posting trades for you guys specifically on Bitcoin and Ethereum, because those are the two main assets that I trade. It doesn't mean you can't use this on altcoins. And this is what I always say. I say, if you guys want more signals, don't necessarily just go to a lower time frame. Try expanding the list of assets that you look at instead. So this is a perfect example of adding those additional higher time frames to give you that more potent H1 signal. And I'm really glad that it worked out how it did, because it's going to make for a very good stream in terms of reviewing this with you guys. And then if you guys have any questions about anything I cover, now's the opportunity. It's much easier for me to answer questions in a live stream format than it is for me to do so in text. I'm much better at talking than I am at writing. So ask away if you have questions. Now is your opportunity. But we're going to break this down. I'm going to go over everything. We'll start on the monthly chart, and we're going to work our way right down to those H1 entries. Okay? And hopefully it will all make sense for you guys. But as you get more comfortable with trading how I trade and trading and reading price action, these high time frames become more fluid, right? So like I said, I taught you just the H12, H1. This guy says, I want to join the Haven. How much does it cost? How are you in here if you aren't in the Haven? How are you in here if you aren't in the Haven, bro? This video is unlisted, so it shouldn't be viewable unless you have the link. So someone clearly shared this link where they weren't supposed to. So we gotta figure that out here, guys. Because I don't want to be like, you can't. Luis, you can't see this on my YouTube, right? Like unless you have the link. Wow. I mean, at least the guy's honest. The Witcher, here's a deal I'm gonna make you, bro. You tell me the details of this leak group, and I will get you a free month in the Haven. But you got to give me all the deals of this leak group so I can get it shut down, because that's some bullshit. We got a lot of people in here who pay for this, and I hate the idea that people are mooching this shit for free. Damn, some scumbags. I wonder if I should do the streams a different way so we can't have leakers. So DM me, Witcher. And if you let me know who the leak group is and it helps us shut it down, I'll get you a free month in the Haven. All right. Yeah, that's a bummer. That is a bummer. Yeah, maybe I should stream in Discord. I mean, yeah, it's crazy to me that you would tell me that you're not actually in here, because it makes me not want to share anything. Petro says, how much risk do you take on these week-long setups? So generally, Petro, my risk is 1 to 2%. Usually 1%. If I'm not as confident in the trade, I'll do even 0.5%. But usually 1 to 2%. The only time I ever go above that would be an example like this, where I feel like I have extra confluence because it's a high time frame setup. So I will double my risk. So if it's 1% that I was going to do, I might do 2. If it's 2%, I might do as much as 4. But that's the absolute max I would ever risk on one trade. And I got to be pretty freaking confident if I'm going to risk 4%. Usually it will be on a trade like this, where it is that really high time frame confluence from the top down. What if my deposit's small? Should I still go with 1 to 2%? Well, I mean, theoretically, yes, right? The idea is you risk 1 to 2% of your account, and that is how you grow your account. Because if you're risking 10%, you can only get a few trades wrong before you've absolutely nuked your account. Now, if you're asking me saying, hey, I deposit $2,000 and the idea is I want to take one trade with that $2,000, that's a different conversation. But if you're when I say 1 to 2%, that's of my trading portfolio, the money that I am using to actively trade. Okay, so I got thrown off here by the leaker, unfortunately, but let's get back into it. So as you become more fluid with your analysis and picking of timeframes, your ability to pick draws on liquidity, biases, and POIs become more fluid as well. You can start aiming for high time frame fair value gaps, previous weekly, monthly highs and lows, high time frame ranges. There's all sorts of stuff that you can start to layer in there to find more setups, right? But at least initially, the way I've taught it to you guys is just a very simple mechanical system, because I think it's the easiest way to learn. And then you can start to get more complex with the type of analysis you do. But if you follow a lot of ICT guys, right, it's very confusing. They're talking about fucking inverse fair value gaps, and they're talking about fucking all sorts of fucking weird PA concepts and fucking order flow and this and that and the other thing. And like the terminology, the terminology, it gets quite confusing, right? And they're talking about the power of three, and then they're talking about the market maker model. It to me, for a beginner, it's overwhelming, right? It's overwhelming. So that's why I developed the system as it is, because I think it's very teachable in this way. And not to mention, I actually still trade it. I do a few other things to add some extra confluence, which I'm starting to share with you guys. But the basics of it, right, are the bones of my actual strategy, which I've been sharing with you guys for years. And then obviously I've gone in more in depth here in the Haven. So it becomes more complex, or you can make it more complex. But the reason I made it so simple is because I think it's the easiest way to learn. But this setup here is a perfect example of adding those additional high time frames to get you even more potent trades within the system. So instead of just doing the H12, H1, remember, I started on the monthly. And if you go to the tweet I sent, everyone and their fucking mother was bearish on crypto down here. Everybody, go on Twitter. Everyone was bearish, okay? Posting shorts, posting 19K targets, 10K targets, right? And I said, listen, it's going to pump. It's going to pump from here. I need low time frame PA to set up. But I was very clear and direct with my bias, right? So we added The Witcher. I'm sorry, bro, but I think I gotta ban you, bro, because you're a leaker. You're cheating the system, bro. I can't have you getting all this sauce. So I'm gonna have to ban you. If you want to be unbanned, you can DM me on Twitter or on Discord, and you can let me know who is leaking this shit, and I'll let you back, and I'll get you a free month of the Haven. But for now, bro, adios. Okay, so again, everyone was fucking calling for lower, right? Why was I confident enough to say the opposite? So it's simple. We started on the monthly, okay? And I drew a couple things out. The first thing was the monthly order block here, okay? So as much as everyone was freaking out and shit about what was going on with price, were we going to go lower, blah, 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 because we had this big sell-off. I said, listen, we had a huge sell-off, but we're into monthly demand and we swept June's low. Okay? So we came into monthly demand, we swept June's low. So I said, listen, there's enough reason for me here to look for longs. I had to see more price action, right? But remember what I just said here. We're adding those extra layers of confluence, okay? So we had monthly POI. We're also in the discount. So we're in the lower 1/3 of this monthly range from here to here. We're below the 50%. We're into a monthly order block and we're in the bottom part of June's range. So instead of just being at the H12, below POI and your bias, right? Because H12, right? We would look for these things. Well, what is my monthly POI? We have a monthly OB. What is my monthly bias? We're below the 50% of the monthly range. Okay. And where's my draw on liquidity? June's mid-range. So instead of just having the H12 stuff, I've now got the monthly, right? So we've got a high time frame, higher than the H12, lining up bullishly, okay? So that was the monthly analysis. Then we went down to the weekly because the monthly SFP hasn't closed yet, keep in mind. What do we have on the weekly? Do we not have the same thing? We have a weekly range. We're below the 50%. We have a weekly breaker block. So this is your POI. We have our SFP on the weekly into the POI. And where do we have for a draw on liquidity? We have this weekly bearish order block and we have June's mid-range. So now I have the monthly as bullish. I have the weekly as bullish. So now guess what? When the H12 is bullish too, that H1 signal is going to be a banger. That's exactly what I meant by this post here. Right? Better understanding the top-down nature of the markets. I started off as a player, blah, blah, blah. So rather than just having your H12 range POI and drilling down to H1, start higher. Find a bullish H12 range in the discount of a bullish weekly range, right? So I didn't just do that. I went even one higher and I went to the monthly as well. Okay, so we have that time frame on top of a time frame on top of a time frame. Okay, there's your weekly. Now where do we go? We go down to the H12. We're trading in an H12 range. Where's your H12 high? Here. Where's your H12 low? Here. So yes, the H12 range is bearish, but we're in the lower part of the H12 range. So we're in a discount. We want to be focused on longs. We had a huge sell-off. Where's our H12 drawn liquidity? This fair value gap, right? And June's mid-range. And we had the H12 set up. We had the H12 SFP. And we had the market structure break. We came back into it. We had another H12 SFP within the H12 breaker. So the first trade I took was based on this, right? But then when we got a second H12 SFP within that original H12 setup, this is what I meant when it's a Lambo long. Because remember, the setup is generally H12 POI right? H1 SFP plus MSB, right? But I have an H12 POI, and then I have an H12 SFP and MSB, and then I have another H12 SFP right here. So we have the multiple pieces of confluence, and on top of all of that, we have the weekly and the monthly being dialed in as well. So when you go here, the original setup, right? Okay, there's your H12 SFP right here. There's your H12 market structure break. We got our H1 breaker that caused that with the H1 MSB. There's your first entry. Then what do we have? We have another SFP here, another MSB right here, and then we again have another SFP down here and even a smaller MSB here. So if you remember when I said, and this second entry, right, I just took it based on this SFP and this breaker. That was the trade. We got the MSB, stop below that new H12 SFP low. But within that, we got an H1 setup that you could have taken. So when I posted this, this was the absolute low, right? Right there. So we had the H12 entry, and then we had an H1 SFP and MSB right there. And I wrote, we just tagged this H1 fractal. It should not go lower than there if I'm right. Where was the absolute low? Right there. So you theoretically could have had another entry based on this H1 breaker right here. And this would have given you an insane risk reward, obviously, because the stop loss was so tight. So no way I would actually have held this all the way to here if I entered there. But even just to this high, right? Like just to this high is 2.5R. Just to this high is 6R. But that's how I caught, and I said, this is the lowest it should go. Was simply based on, we have all of the time frames. We have the monthly, the weekly, the H12 all set up, and then we have multiple. Here's an H1 setup. Here's an H1 setup. Here's an H1 setup. Why did they all end up working and pumping so hard? Because all of these things were lined up. We had H12 discount, H12 SFP, and an H12 breaker. That's what this big box is. We had the weekly breaker, the weekly below 50% of the range, the weekly SFP. We had the monthly order block, the monthly run of the low, the monthly discount range. So all of those things stacked on top of each other is what gives you these killer moves. And that is how you add another layer to the H12 H1 system. Yes, you can trade this system on other time frames, as I've shown with you guys. I did the H4 M15 backtest on Euro USD. I know some of you are trading this on the H1 and the M5. There's lots of things that you can do to improve or to change this system to get more signals. But the way that I like to trade it is the H12 H1. But when I get these added pieces of confluence with the higher time frames also setting up, it gives you a way stronger signal. So I hope that this breakdown explains, what I posted about in Discord there with how do you add to this system. It's lining up those high time frames on top of it all. And look where price is tagged, right? Nailed June's mid-range, right? So the shit works, right? Remember in the last stream, I just said we're simply playing June's range, right? So this is June's range from here to here. right? Mid-range, right around here. What did I say? I said, hey, we ran the low, target is the mid-range, get above the mid-range, we target the range high. So this could easily reject here and trade back down, but it also could consolidate here, reclaim June's mid-range, and then trade to 32, right? And I just played it as a range. That's all it was. I said, this is your range 1, this is your range 2. So we either reject from here, or if we reclaim the mid-range and hold, I'm holding some of these longs towards 32K. But I hope how I've explained it here has added a little bit of color to the system. So it wasn't just the H12, H1. It gave you the setup, but why did it work so well? Why did we get a 7% green candle? It's because we also had the monthly and the weekly lining up bullishly as well. So it was that multi-time frame analysis, top down. The bias was driven from the monthly, then the weekly, then the H12, and the H1 was simply used for entries. And that's how you get these 4, 5, 6R trades, that work out really well. And I know a lot of you caught this with me because this one took forever to play out. So you had tons of time to get in. And it also gave you multiple H1 triggers. So I'm hoping this added a little bit of color for some of you guys who may have had some confusion. I hope a bunch of you made money on this. But I just thought this stream would be a really good example to go over the setup and explaining that additional top-down confluence, okay? I'll take some questions. I'm still in this link trade for anyone wondering. We took this. This is a swing trade, so it's going to take a while to play out. Dipped a little bit below entry. We're now back above entry. But still in this trade. Still in nat gas as well. This has been taking a lot longer to play out than I had planned. I thought it would kind of have broken out from here, but I'm still long. We're still holding the lows of this consolidation. So I'm still holding this trade. Still think we can trade higher. The dollar, I think we can still take out this high. But again, this has been a crazy move up. We could absolutely pull back a little bit before continuing. The H12 here. This is your range on the H12. See a pretty nasty rejection. So this looks like it probably wants to trade below here at least. And then we'll see. US 500, we got that sell-off pushing right back up. I still think that this wants to take out this high. So we'll have to wait and see. But if it closes above here, this becomes like a daily breaker, right? This would be a daily breaker. And we're all of a sudden looking for longs up into here, right? This becomes the plan, I think. All right, so I'll take some questions now here, guys. Hopefully you have some. But yeah, this looks good to me. Like the monthly big sweep of the low into demand. I think a lot of people were caught off guard expecting lower prices. I wouldn't be surprised if that's the low for a while and we trade higher now. All right, so I'm going to go through the chat here. Let's see if there's any questions I can answer. I was going to ask, I saw ZS1 post about the indicator. Will that be something available for all or pay, or how will it work? No, it's going to be a paid indicator. I didn't create it. There's a developer who approached me and Z and said, listen, I've been working on coding your strategy. And he built something pretty cool. We've helped him improve it by just getting on calls with him and testing it. And we're now open it to beta test, but it is going to be a paid indicator because it's not mine. I didn't create it. I helped him, but it's his. And I'm not going to just give something away that I didn't create for free. But to give you an idea of how cool it is, but yeah, if you're interested in that, I'm posting signals from it in my Discord, and we are beta testing it right now with a few people live. But you can see here both the longs that I took. You can see here. Get rid of all of this. No. So both longs I took, you can see. It actually it triggered on both longs. It caught both positions. I mean, this one was insane. This was the low time frame one I didn't even take. But I took this one, H12, H1. And this is the H12, H1 as well. I mean, this one's a banger. So this is where when you see this means that you set an entry at the green line. This shows you when that entry gets hit. Set an entry at the green line, entry gets hit. So here, for example, this would have been stopped out, right? This short, killer, right? This long stopped. It trades really well on AVAX. So if you look at AVAX here, once it loads, you can see it longed here, AVAX. It shorted the top here. Shorted up here as well. So it's still in beta, still a work in progress, but it will be available for sale once it's done. Again, it's not my indicator. Someone else created it, and they approached me and Z because it's based on how we trade. So we got involved. We're helping out, but it's not mine to give away. But it caught this long, and it caught this little one right here, which was a banger. Okay. Can you break down these high time frame, high conviction plays in a back test in the future? I mean, that's what I just did here. So hopefully that makes sense. How do you choose which high time frames to look at on which pairs? Noted you use the daily for SPX, for example. I use the same time frames for everything. Monthly, weekly, daily, H12, H1. Same for everything. Yeah, but I have $4,000, but only using futures, so I end up using only like 5% of the deposit on several positions. Yeah, I mean, 5% risk at any given time is a lot, but I mean, yeah, sure. Okay, I'm kidding, man. I will text you on group chat. Wait, okay, I don't know what that means. I'm actually TH member, and I'd like your view on US 10 bearish SFP if you can and have time. Sure, bro. Yeah, so I mean, look, we have all-time high here, I assume. Or no, not all-time high, but this is a very high time frame high. The monthly hasn't closed yet, right? But the weekly has. Imagine the 12-hour. Yeah, the 12-hour already gave you the setup here, right? So you had the weekly SFP, right? There's your breaker. There's your MSB right there. So that all checks out for me. As this should go down from here, continue down, right? Just broke market structure here, so any sort of bounce, I think, probably sells off again. Petro says, wasn't this pump caused by the news? What news? Does that answer your question? I don't know what the news is, and I'm long. And remember, I entered these positions. I entered the first trade last week, and I entered the second trade 2 days ago. So how is it caused by the news if I was already positioning for longs well before any news was announced. The chart always comes first, in my opinion. There's going to be people who tell you it's the news, it's the chart, blah, blah, blah. I always look at the chart first. I don't know what the news is even. I don't even know what news you're referring to, but I was already in these longs. Yeah, I agree with Bilbo here. News causes volatility, but the setup's already in the charts. I'm assuming since all of those things lined up, you took more size than usual. Is that a good way of deciding whether to size up or not? Absolutely, right? On my swing trades, I would consider these swing trades. I usually double my standard risk. The beta test is beginning. If you're in my Discord and you're interested in beta testing, you got to be in there. It's not on TradingView. It's a invite only. As you've stated many times before that you and RecProof are both ICT students, and so am I. I think your setups are way more cleaner than anyone, and it's mechanical. Thanks, bro. If a new wick stops you out but closes another SFP, do you immediately take the trade again? Not necessarily. If it sets up again, right, because the SFP is not the trigger. You need more than that. But if it sets up again, I'm willing to take another stab, yes. It's 5% for like 5 positions. So 1% per trade, and the rest of the depot basically giving me a money pillow to land on if I get many trades wrong. So that's fine, Petro. Just keep in mind, right? The market is extremely correlated. So if Bitcoin goes up 5% or 6% like it did today, and you are short 5 different coins, you're probably getting stopped out on all 5 of those, right? So keep that in mind. Hey, bro, how does the time of day come into play with how you trade your system? I mean, listen, the best trades are going to happen around the session opens and closes generally. I know ICT gives a lot of focus to time and price, right? Time and price. The entire 2022 mentorship model is based on a specific time of day. The silver bullet, specific time of day. When you're trading on the very low time frames, right? Like he's entering on the M1 or the M5, and you see all those people entering on those low time frames. The time that you enter definitely matters around the New York kill zone or all that kind of shit. For me, because I'm entering on the higher time frames, it's not as important. You will find, right? So like if we go to Bitcoin here, and I turn on this, look when the move occurred, right? Both of my entries happened right in the New York kill zone. Did I plan that? No, just generally works that way. But when you're trading the higher time frames, I find entering at a specific time of day is not as important as when you're trading the lower time frames. I'm curious, you left a bunch of longs to roll. What do you need to fully close? I need to see price reject really harshly from up here or something bad happen. But I got long near the very low. We hit my initial take profit area. I'm taking some off the table. But this can trade much higher, so I don't want to give up my long exposure. But yeah, if we reject here and we fail to get above the mid-range, then I'll get out. I want to see consolidation and then continuation. Main, let's say you cut the position. This is from chat. On the bearish H12 HFP, but then the strength is coming back, and then the market's on the low time frame, or you see price gain back above your exit and grinding up. What triggers in your system that let you get back in the position before a ripper like this? Nothing. If you cut the trade, I need a whole new setup to form to get back in. If I cut the trade and then it continues to go up, I don't just rebuy, right? I need to have rules. Certain things need to be met in those rules for me to take the trade. So if I cut the trade, I need a whole new setup to form, right? Ideally. But missing a ripper like this, yeah, it sucks, I guess. If you cut it because of the H12 SFP, the reason I left it, right, is because the trade was still valid. So I said, hey, I don't love the close because it was a bearish SFP. So what did I do? I de-risked one of my positions. But I was not wrong until we got to where my stop out was. And I mentioned, if I'm right, it shouldn't go lower than here. So if we would have traded below here, I probably would have cut, but we didn't, right? We maintained the structure. We respected the fractal. I de-risked this trade to where this stop was, as I said I would. And yeah, the trade is not wrong until you're stopped out. So if you're exiting before that, and then it goes in your favor, like if you exited based on this candle close, right? Even though your stop was down here and you wake up to this, how fucking mad are you going to be, right? This is why you have to trust the system, and your stop goes where the idea is wrong, especially early on. If you do not get stopped out, why are you touching it? How do you decide when POIs are valid and when they are used, expired, invalid, or what you might call it, trying to mechanically think through them? Once it's traded through, it's no longer an area of interest to me, but you can test an order block multiple times. You can test a breaker multiple times. As you can see here, right? Here's your H12 breaker. We broke up, test, traded within it, moved away. Here's your H1 breaker here. On this one, for example, test, test. On this one, right, multiple tests here. So it can be multiple times. I don't think of it as like support resistance where 3 taps and the level is going to burst. But generally, if this is your order block, right, price can test it multiple times. But I want to see within this area, if I'm bullish here, I want to see on the lower time frame, bullish price action. And if we're testing an area multiple times, one clue that it might be failing is if the bounces are getting weaker and weaker and weaker, right? You do want to see some. The idea here is that the bulls are going to step in here. So if I don't see any signs of bullishness, that might be a sign that the level is not good. But until it gets traded through and closed through, it's still valid. OBs become breakers when MSB through. What if an OB just gets tagged and price moves through it? How about length of time, other factors? I don't even understand what you're saying there, bro. An OB, right, is this, right? But then if we trade through, now it's a breaker. Right? Because now it took out this high and it switched the other way. I don't understand the second part of your question. If you move sideways in the breaker zone for an extended period of time, does that matter at all? Are you looking for a quicker move up? It depends on the trade setup, right? If I'm entering based on the M5 or the M1 or the hourly, it's all going to be different. But as you can see, sometimes it sticks around in that zone for a while, but it continued to put in bullish price action. We got lows taken out and then new highs made. So that gave me the confidence to sit in the trade. Sorry, guys, one sec. Oh, yeah, sorry, I'm playing with coins, my bad. Loonies, not toonies, brother. Leftover from the arcade. Trying to ask another way. Do you consider the immediate range POIs then is a bullish OB pushes price up and creates a new range, or do you then ignore the previous OB? If I understand your question correctly, the answer is yes. You want the most recent point of interest that caused the displacement. I've noticed sometimes there are multiple swing lows and highs where I am looking for SFP. How do you identify which swing low to use for your entry fractal? It's the high or low, right, that broke the low, right? So if there's a low here, okay, if we run this low, then I'm looking for the swing high that ran that low to then base the entry fractal on. If you're asking which levels you choose to SFP, right, I'm just looking at that very simply, right? We have an H12 low here, it got SFP'd. We have an H12 low here, got SFP'd. We have another H12 low here, it got SFP'd. I'm just using H12 highs and lows generally. And then sometimes on the hourly, right? So if you're on the hourly here, you can see we had a hourly SFP. We had another hourly SFP, and you want those to be happening within the points of interest. And again, yes, recency matters. Like I know a ton of people who were waiting for this low. Like I saw a ton of charts saying, I want to see this low. I'll enter on a sweep of this low. To me, I'm like, why would they give you the chance to fucking get there again? I'm not saying that it couldn't, but to me, we ran that low, then we ran this low, then we ran another low. To me, that told me that this was accumulation here, and there was no need to go down here. And again, I could have been wrong. Remember, everything I'm saying here, it sounds like matter of fact because it worked. I just as easily could have been stopped out on all of these trades and been completely wrong, right? It's a game of probabilities. I'm making an educated guess. I mean, technically, yes, it can be any lower high, but context, right? It's not any lower high. It's a lower high within a certain specific area that is in line with a certain specific bias. If I'm bullish, I'm not just shorting every bearish SFP, right? The Witcher, I'm not answering your questions anymore, bro. You're a leaker. Like I said, DM me if you want into the Haven, but otherwise, fuck off. Do you ever keep range high where it is when a candle goes back below after closing above it? It depends. If you're being strict to the H12, H1 system, then no. But a perfect example is on the dollar, right? Technically, like, so I had this as our range. Well, technically, this is the new range low, right? Because we broke below here. But because of what my bias was on the dollar, I left it there because I saw this as a potential deviation, right? Which you can see it was. But if you're being strict to the system, which especially if you're a beginner, you should be, yeah, this would have been the new range low. They call me, I'm gambling. I told them I'm making educated guesses. Exactly. You're making educated, risk-adjusted guesses. All right, guys. So I hope there was some value here. I hope there's some value here for you guys. Definitely lots of tidbits of information here and a really good example of how to add that second layer to the system in this example here. So if you got any questions, hit me up in the Haven, the Witcher. If you want to get into the Haven for free for a month, DM me and help me stomp out those leakers because that shit's whack. And yeah, I will talk to you guys soon. But took some profit across the board. Big win. Everyone was bearish except for your fucking boy. So you're welcome. Last question here. Why would the H12, H1 is the main? Did you test many other combos and find? It works. All time frames build upon each other, right? You can use this on any time frame you want. The reason I teach the H12, H1 system, one, it's one that I actually trade. The reason I like to trade it is because it moves slow. So I don't have to be glued to the chart all the time. There's 2 trades I took here in the last week. I'm up 7R. To me, that's way better than taking 50 fucking trades on the low time frame, personally. But this works on all time frames, the H4, M15, the H1, M5, all that kind of shit I've discussed. It's all the same. As long as you understand the top-down analysis, you can get as granular as you fucking want, down to the 1-minute chart. And another reason I teach the H12, H1 is I know most people are not trading full time. You have jobs, you have other responsibilities. Maybe you got kids, maybe you got all sorts of shit on the go and you don't have the time to be scalping. So this is a system that you can trade consistently without really needing to look at the chart more than a few times a day. So those are kind of the main reasons. All right, guys, signing off. Hope you guys learned something. I'll talk to y'all in